Ladies and gentlemen of the crypto space, we're live on a Monday, February 5th at 11:42 a.m. Are you confused yet? I mean, frankly, this is a phrase that we could have said for the last 2 years, and it should be confusing because everything has been turned upside down. The rules-based order of the world, the normalcy that pretty much existed pre-2008 was flipped on its head 15 years ago, and it's been getting more awkward ever since. And that awkwardness, that strangeness is most obviously manifested with the growth and expansion of crypto markets, because that is things that are in the realm of what historically was that of sovereigns, concepts of collateral, concepts of money. And that's why it seems so strange to the mainstream. And so many folks have been talking about Bitcoin in terms of money for a long time. And more recently, especially post 2020, people have talked in terms of currency, not just money. And that's like stable coins. But now, even more recently, probably 22 plus, we see strength in endogenous stable coins that have some sort of expectation of consistent value. And this endogenous phenomena is very much a currency of an emerging market using collateral native to that emerging market. And sure, we have historical comparisons with pegs of foreign fiat to US dollars, China and many other currencies around the world pegged to the US dollar. But I think these crypto markets are going to prove much more resilient and capable of servicing these pegs. Historically, these sovereigns, they wield great power with their GDP and their populations and their productivity, so on and so forth. But it's an analog system as much as, yeah, it's digital in regard to they're using computers like the Fed, and you have Jerome stating, yeah, we printed dollars. Yeah, it's just adjusting the computer. It's not the same. It's not the same as smart contracts making the adjustments as compared to persons making the adjustments. And I think these systems are going to prove much more interesting and certainly in many regards much more reliable than anything that sovereigns have been able to produce over their entire history, frankly, for that matter. So today is Monday, and a whole lot of macro shit is getting convulsed, getting thrown around left and right. And China, obviously, their markets, the headlines speak for themselves. The markets have basically been collapsing, down 30% on the year and 8% on the day, and things are hitting limit down left and right. And yeah, you can look at markets, but equities are very much the froth. And the froth are going to move like that. And we see that in crypto markets where you have giant 70, 80, 90% swings in volatility over years' time. And in equity markets, that is the manifestation of froth. And that froth in sovereign terms is really a result of collateral and currency. It's there's the swaps, the currency, the cross currency relationship between nations that create that volatility. Let's pop it over to the main screen, and we have up 10-year JGBs, and that's 11% on the day. That certainly rings tight today. I gotta drink water. That is certainly volatility to say the least. And look at the directionality and look at the support versus resistance. Yeah, you have a blow off top, but it literally smacked into support. And these types of things take a long time to play out, and support here creates the confusion in the market. And as a result, look at the yen compared to the dollar, back up at 148 real quick, never broke the monthly time weighted average price to the downside. This is a precarious situation. So we see the craziness in the currency or the stock market of China, but then you go over to the currency and it's obviously on the defensive. But look how Japan is responding. That is much more on the defensive. You get back to these all-time highs, that's a ceiling, 150, 152, and the directionality points to not chaos, but change in behavior. And the biggest change in behavior is what Luke Gromen talks about, where when your back is up against the wall, you sell anything you need to get done what you need to get done. And in this regard, you got to support your currency, you got to support your bond market. Otherwise, there is no economy. And that means you have to sell shit. So you're not going to be selling shit domestically. You need to be selling stuff that is dollar denominated. And it so happens that China and Japan still have a lot of firepower in their nation state piggy bank that is U.S. government treasuries, long dated debt instruments that countries over the last decades have stored up in their piggy bank for when shit hits the fan. It's the savings account of nation states. So, I mean, everything's playing out the way Luke describes very well. And, I see his narrative certainly mid to long term, and then the ultra long term is obviously still very much Brent Johnson in play. And that's just the case, 10, 20, 30 years. That's the end game. He describes it like I've never seen anyone describe it, but Luke's really spelling out what's going to play out. Like the sovereigns their backs are starting to get their back up against the wall again. Are they forced to sell their bonds? And that's going to put further pressure on the capacity for Treasury to meet their fiscal expectations, their issuance mandate. What kind of market are they going to sell into? I mean, look at the response of U.S. government debt. Look at these yields, up 3-4% on the day. The market is telling us very interesting things. And what's also interesting is that, we'll talk about U.S. equities. So U.S. equities, if the world is struggling and it's underperforming, where do you send your capital? So obviously China has capital controls, which restricts that flow into foreign investments, but there's a whole world out there. So in aggregate, the flow will be from underperformance to outperformance. That's just a rule that I've talked about to great extent. And clearly we've seen significant amount of support in U.S. equity markets, barely down today, albeit the Russell does have a minus 1.71% on the day. S&P still looks strong. NASDAQ strong as ever, but this is like that whole Mag 7 conversation versus the S&P 493, and it's not the economy. It's very concentrated because the vast majority of shit out there is completely annihilated, for lack of a better way to describe it. So what we have is smoke and mirrors and political narrative resulting in mainstream media narrative, and it certainly has played a hand in the way these ETFs are balanced. Their position sizes are very much skewed towards what's outperforming. Anywho, so what are some good takeaways from all of this shit? Who cares what equity markets are doing? That's not what's interesting. Equity markets are going to be a result of the same thing that happens in currency markets in many regards, geopolitical collusion. Because the world is still what has resulted from outsourcing and globalization, and we're being weaned off of that real quick. But the entire system in the United States is dependent on the entire system in China. If China experiences an economic collapse and the banks don't spit out currency units or the CBDCs don't get distributed, I don't know. If there's social disorder, if there's chaos, then you don't have productivity. And if you don't have productivity, there goes the supply chains, and there goes U.S. inflation, consumer price inflation once again. So it's all connected. And if Japan has too much complexity, they're going to have to sell U.S. treasuries. There goes the capacity for the U.S. to finance fiscal, and it gets really complicated really quick. So it's the same thing for U.S. equities. Who do you think owns all this garbage? The net international investment position is very negative for the United States. So the world owns this stuff. So the world is continuing to pile into this stuff because what's most interesting is that the world is in a much worse position financially as compared to the United States. Why? Because obviously, as Brent talks about, we could print our own currency. So we're going to pay the nominal rate of return on our debt instruments. And that is becoming increasingly complicated of a situation for many countries around the world. How about that? Cleanest shirt in the laundry, as everyone at this point talks about. So we could easily see great volatility in equity markets, which is scary, and that scariness spreads. Fear spreads. So we can easily see that bleed over into crypto markets with exacerbated volatility because these are micro emerging markets. They're very small market caps compared to the market caps in the equities market. So the fear of a 20% drawdown in equities markets produces a great deal of volatility in the crypto markets. But interestingly, the crypto markets are expressing a great deal of strength. I mean, at least they're not negative, and they're actually marginally green on a day like today. What's going on in China? Limit downs in the nation's equity markets, and that's fascinating. And I think it's telling an interesting story. And the story has always been the case. Where do you put your money? And the crypto markets have always presented that new destination outside of the system, an emerging market, as I've described for years at this point, but it's an emerging market not burdened by history, not burdened by the status quo of politics and a population's history. It's just kind of this free, clean space, a free zone that's not of any nation but of all nations. And that narrative is the case, whether everyone sees it or not, and the market will tell us the more they see it as if prices are supported. For instance, if you have a 20% drawdown across the board in U.S. the big inflated equities and crypto markets remain resilient, that would be absolutely fascinating to see. Outperformance occurs to the downside as well. Everyone sees it. Meaning, if that occurred, minus 20% in US equities, and limit down, and crypto markets are basically minus 1% on the day, that would be one hell of a signpost. And nobody would miss it. It would be an interesting destination for capital once things start to stabilize for sovereign nations because they outperform, this market outperform as sovereign nations experience very difficult times. Now, we could always talk about crypto markets, but clearly macro and folding macro into crypto is something that most folks don't do. There's a couple of interesting things in crypto markets. I took a conic position some days ago, decent price. And where is it at? Concentrator took a hit down to 68. So I've been looking at solidly as well. I'll get back to solidly. Where's Conic at? I'll give you guys some of the stuff you like. So I took a position probably around 370 something. Set and forget. I locked it. I like it. Now, I don't think it's overwhelmingly mispriced. I mean, it literally just relaunched its second version. But this is a very bright curve type of protocol, and it requires understanding the curve federation and the economics um, of its currency and its fiscal spending and its sterilization pressures. So this is very right curve. I don't expect significant appreciation, albeit it has its own supply and demand pressures that are distinct from every other token. It's just what it is. So you can't have that significant outperformance. But this is in that right curve camp. It's certainly not left curve in meme coin territory, and it's not mid. Mid is, Ethereum, Bitcoin. That's mid curve territory. So this is obviously in right curve territory. So there's a much smaller population of persons that engage with markets in right curve territory. So that's my 2 cents. It's not necessarily at a discount, um, which is something very much to consider, and it doesn't have that large population to drive the significant appreciation. Albeit, look in January, you get these big rips, 100, 200, 300% to the upside. So I don't know what's going to play out. I just know my choice, and I was able to achieve a particular position size that I liked, the amount of capital that I had available, and that's all that matters. Um, I We've been talking about solidly for years at this point. So what do I look at and what am I seeing? I've seen a lot of E33 protocols across the chains over the last couple of years. A lot of talking and shit talking all over the place. My opinion is that some of the most advanced software has been done on this particular protocol. And I think at this point, a lot of vested interest risk has subsided. And I agree with the sentiment that they want the protocol to succeed. They wouldn't have done all this development if they wanted it to. Didn't they wanted to do something other than big success? Success means consumption, use, and that's what has occurred. It's very impressive from an efficiency standpoint. It screams Maverick, except not gross. I think I said that publicly, and I'm saying it right now. It's just something that's always been gross about Maverick for whatever reason. I don't like to talk down about protocols. I know there's devs over there that are working very hard, but there's something that's just yucky about it, and it is what it is. So I very much appreciate that efficiency, and look what has occurred from a routing perspective on mainnet. This is getting the volume, and that's very interesting. Um, do I have I don't have DeFi Llama up right now. Hey, we can pull it up real quick and I can talk in the meantime. So my general sentiment is it's gone to base, it's on Optimism, it's on Phantom, it's on mainnet, it's got CCIP integration. So it has the efficiency of Maverick, very interesting, and it has the original Andre tokenomics with dilution protection. A lot of people hate on that dilution protection, but I think that really changed the game. That was a big deal in my opinion. And it has no vote rental cash flow, so there's negatives. Is that a negative? I mean, I don't think this is in an XYZ type of position from an evaluation standpoint. I wouldn't buy at market price. That is something very important for me to express. I could not achieve a position size that I would want to achieve at market price. The only reason I took a position is because I was able to acquire it at OTC, and OTC could go on their Discord. There is an OTC channel for people that are wanting to offload their locked VE solid positions, and literally someone sold it to me at 17 cents. So what I account that behavior for was that, yeah, maybe he made a couple of multiples, maybe he turned 2,500 into like 10 grand, and that's cool. That's a big deal, especially if you're used to operating on Arbitrum, Phantom, smaller networks. You have a smaller portfolio. That's cool. Coming from, you know, uh, the uh, the relaunch like 2 years ago when this launched. So he was probably up, and also a misunderstanding of locked assets. Um, Locked assets, you get the feel that you have this equity and you can't tap it and you're frustrated. So you want out. You feel like you're trapped. Prisoner's dilemma. But that's not something that I think. I have a very different perspective. So when I acquired a position, I was like, all right, it's a purchase. Do I have the capital? Can it potentially do what I want it to do in the future? Not now, given that XYZ is not applicable right now, given the cash flow is not what I would like to see right now. So could I acquire an effective position size forward looking, 12, 18, 24 months? And I was able to at this OTC price. So see if you could get it. If you could get it at like 17 cents, that is not unpalatable. There's no cash flow, so that needs to be a consideration. And that's the type of thoughts going through my mind. Um, I wouldn't take it at the current market price. So I don't know what folks take away from that kind of statement, but I say it very clearly. Um, what else is going on? Cosmos hubs are still strong. Where are we at? We're February 5th. Folks have been saying Dimension launches tomorrow. We'll see what happens there. It's not going to be a claim. It's going to be a direct distribution, which is very interesting. There's a nice airdrop there. Not something that I'm going to be disappointed about. Folks are saying it launches at $4, $5, $6, $7, $8. Cool. Fractal's coming really soon, and obviously we saw Frax run up to $10.75 today. So on the monthly, you don't see it as clearly, but if you go into like to the weekly, it was basically a nice ceiling being built right here. Let's pop it on the horizontal line. I mean, it's literally like right there, and that just looks crazy when you see resistance getting hit, resistance, resistance, resistance. Pretty interesting. So it's just patience, and that's why folks do a lot of things, and it turns out to be wrong. It's impatience and time preference, and my time preference is infinite. And I have a very clear vision of what the portfolio is going to be like in 2030 and how I'm going to capitalize on the portfolio and what I'm going to have to sell, which is basically nothing. I'm not going to have to sell anything. And that's what I want, and that's how I've structured things. Dan's in the house, a pleasure. A Sarko afternoon. Tapsy, what's up? Raul T. J. Demoogle. I like it. Hey Noah, what are your thoughts on Prisma at these prices? See, Prisma is downright fascinating because there's a huge amount of capital inflow from uh, from the interest on the debt. 5 mil. So so it's oh come on, why can't I drag it? There we go. Okay. Okay. So it's complete prisoner's dilemma, which has fascinated me for a while. And you'll only know in hindsight how well their experiment, their money experiment plays out. Because you can't, if you're an LP provider, you're selling one at a 50% claim fee to claim early. And then you're also selling into CVX Prisma, which is light. It's certainly not one to one. It's the only pathway for exit. So you're taking like a 70% hit, 80% hit, liquidating any LP return. So it's big prisoner's dilemma. Um, I don't know. So how did I play it? If I am not thinking about the price of the asset, I wanted to acquire somewhat of a position size. And so I LP'd. And unlike everybody, I lock as VE Prisma. One, because they literally have a switch where it's not claimable. So when you claim um, your LP yield, it's not claimable, consumable. It's claimable as an allocated to your permanent, your lock. So I think that's interpretable as tax friendly in my opinion, and I think all of this shit is completely questionable from a precedent standpoint. So that's another story. But I was able to acquire my desired position size, and I wouldn't buy it, but I LP'd it, which was interesting. I mean, you guys know me for quite some time. Have I ever done anything like that? So I did that. I don't have the LP anymore. I exited the position. The yields have come down significantly. Let's take a look for the fun of it. I had it Prisma Eth Convex, 113%. So that was pretty much where I said, all right, 113% return. I didn't want the exposure to the volatility. I expect it to be volatile. Volatility goes up and down, whatever. So I exited. And I was able to get a particular number. I know folks asked me on Discord what I was looking for with regard to a position size, and Dan, it was a 20 chip. And I'm okay with that. It's not a relatively big number. It's not going to change a lot of things for me, but holy crap, that's a lot of yield. 36% pure cash. So I'm certainly not complaining, and you got your boost delegation, so you get a little bit of Prisma. I mean, it's relatively trivial, But I'm not complaining about the 36%. I wish it was $1 million. $1 million at 36%. It's big numbers, but that is what it is. So the 20K was where I felt comfortable. I exited the LP, and that's how I acquired that position. Um, so I hope that helps TJ Moodle. Uh, Otherwise, I'm very curious, forward looking. It could be a big deal. Stable coins, dollar liabilities, that's literally what this is. So you take an LSD and use it as collateral, and you're printing MKUSD. So it's very much consistent with exactly what I think is the biggest narrative in the crypto space, dollars. Um, it's just that there's unknowns with regard to market dynamics, what people actually choose to do and how they choose to interact with this protocol, whether it's mercenary yield farming, and I'm pretty sure Justin Sun still has a lot of collateral in there, so there's risk with regard to who's borrowing and how it unwinds. So there's volatility risk on Prisma, and I just didn't want exposure to that anymore. I exited the LP, and now I have a lock position producing 36% of the money. Very happy for this to go 10x, 100x on the money, and I'm still getting 30% of the money. So that's cool. So this is how you acquire a position. It needs to be at a favorable price. You're forward looking 12, 18, 24 months. Consider the multiples. And what's very interesting in crypto markets is the APR is not proportional to your basis. Your APR is very much proportional to market price, and that presents a very interesting considerations for how much of a position size you actually need. Speculative position size is maybe all you need, which is relatively small, considering the potential multiples that we can experience. Breakless Riders in the house, George. Hey, hey, George. I did mention solidly. I think I went over it the extent of what I need to. Um, I wouldn't acquire at market price. Worthwhile for me to say it again. But if you could acquire it at a discount, I mean, look at that's big volatility. It was at $4 down to $1.67. That's not something I would expose myself to. I don't want that volatility at all. But if someone's willing to sell it to you at 80, 90% off in the OCC Discord channel, or if you grab an NFT in one of the marketplaces and someone like remarkably mispriced it, someone's selling it at like 17, 18, 19, 20, 21 cents. That's crazy. I don't know what people are thinking, 12, 24, 12, 18, 24 months out. Let's take a look. I want to see where it's doing on volume. I mean, come on. It's pretty damn interesting. So, folks, there's a lot of words that go back and forth with folks, but I mean, it's literally right there on $11 million in volume. Come on, it's 100 mil a week. It's very interesting, but still, it doesn't matter. Doesn't matter. Great tech is not necessarily a great investment, and that can be offset with getting a damn good price. So unless you can get a good price, it may not be a considerable position. Never forget that. Athletic Concept, can you explain Conic, high APY on stables and Ethereum? Oh, it's throwing around CNC, so it's all incentives, and that's going to get diluted real quick. Um, but Conic is seamless liquidity provisioning. That's a big 2021 narrative I talked about. And it took years for Conic to come online. And Conic plays into the Curve Federation and the capacity to seamlessly spread around liquidity, particularly from a CRV USD perspective. So that's quite meaningful. Uh, that's the Conic story. It's really as simple as that. And they had complexity with their V1 implementation, and V2 literally just launched. Where are we at with regard to price point? 370. not at a favorable price point with regard to mispricing at the market price. The bonds might be an interesting way to acquire discounted CNC. So that is something that's an interesting thought. Discounts. You need a discount. And the problem with a discount at market price means you're buying when everyone else is afraid. But it turns out there's other ways to acquire at a discount to market price. That's why seed rounds are interesting. That's why bonds are interesting. That's why OTC deals are interesting. So that's how you get an edge. And that's how you're able to acquire a decent position size, uh, considering maybe restricted free capital in a portfolio. Hope that helps. Confused indeed. Are we going risk on? Is there still some risk of a bigger Well, the system is always at a risk of collapsing. They massage the system. The geopolitical collusion is always engaged. This is a managed Keynesian system. That's the whole definition of a Keynesian economy. It's the monetary policy is managed to control supply and demand pressures, currency expansion and contraction. It's a managed economy, which is literally what we do in DeFi. Um, Except theirs is very mutable policy, whereas you could have a adaptive yet immutable policy with smart contracts, which is where I think the future is. It's not at a fixed monetary policy like with Bitcoin. It's with an adaptive policy that is immutable. That's my sentiment on the topic. It surely is going to be confusing, but you need to digest that and process that. And the better you digest that, the market is always ready to collapse. Even if you see the equities markets exploding or crypto markets exploding, doesn't change anything. If they understand the system is always ready to collapse and they're either massaging it favorably or unfavorably with regard to price appreciation. And the scariest thing of all is that price appreciation is a manifestation of the market heading in the wrong direction. Not the market, but the economy. It's a distortion. It's a perversion. The disparity is getting worse and worse because you got to always remember the vast majority of people working don't own assets. They're not exposed to this kind of income, and they're working 9 to 5 for an average wage, and they don't get ahead. And you see all the Fed charts that people, the Fred charts that people put around about how 90,000, 91%, the vast majority of assets are owned by the wealthy, and everyone else owns less and less over time. So when you see all these markets rip to the upside, the disparity just rages, and all of this leads to social incivility. Have you seen France? Have you seen what's probably going to happen sooner or later in Germany as well? I mean, France, come on, just literally look at what's going on in France. Oh my God, they are, by the way, they are really good at protesting and revolutions. If their history doesn't speak enough to that capacity, it's, they literally throw shit everywhere. It's quite fascinating and scary at the same time. George, what happened to tapioca? Tapioca's coming. Tapioca's coming. I am very much looking forward to tapioca. Those boys have put so many cross T's and dotted I's on that protocol. It's what I said about CODIC, seamless cross-chain liquidity provisioning, a stablecoin that exists on all chains, and that's really what Layer 0 V2 especially offers. It's very interesting, and I think Abracadabra will handle its recent complexities well, and I think they're still hungry, and I think the seamless cross-chain dollar liability narrative is the biggest narrative in these crypto markets. Literally bullish on dollars. Go figure. Digest that because clearly a stablecoin is not appreciating, but what is a stablecoin? And that's why a good part of my entire portfolio is a manifestation of understanding what is the dollar and how the dollar works. Bill, hey Cap, able to match catch two streams in a row. Always a pleasure. What would be your advice given a young 20-year-old adult that is interested in DeFi or general life advice when investing? Unlearn everything that was taught to you, unless it was a radical professor. Get a Real Vision subscription. Understand what money is. I mean, I could say a statement, and then it's everyone's individual responsibility to understand what it means. Because the dollar, when I just vaguely can get a glimpse of the perspective I had when I was younger, and what I say nowadays, I would have never understood it. Like the dollar is an incentive system. They're literally just saying, do this work, and they're convincing you to do this work using an incentive system. And we've dealt with a lot of incentives in the crypto markets. So digest that. That's all money is, to convince someone to be productive. And then even worse, it's a way of managing labor and managing productivity, incentivizing productivity. But even worse, it's first and foremost a way to ration natural resources. And consumer price inflation is the organic process of rationing natural resources. And the Keynesian economists pull levers to try and affect basically currency supply. And clearly they could directly increase currency supply, but that historically was very much an organic process based on credit in the commercial banking system, but that has very much changed. And that's why they've thrown around this term recently called fiscal dominance, where, yeah, interest rates manage the amount of credit that the banks are extending, and that historically was the way money entered the system. Uh, but now, I mean, look at real estate. Real estate has collapsed. There's no, the mortgages have collapsed. So there's clearly not an expansion of the money supply from a real estate perspective. It's at historically collapsed levels. Um, so it's fiscal dominance. That's where the money supply is being managed with regard to contraction, deflation, and expansion, inflation of the money supply. Understand inflation. There's a difference between currency inflation, consumer price inflation, asset price inflation, real estate or crypto or equities. All inflation means is expanding. Deflation means contracting, but there's no such thing as inflation. Inflation is relative to something. It's an adjective, adverb. It's describing a particular thing doing something. Something is inflating. Oh, the inflation is bad. The consumer price inflation is bad. The currency has been deflating, and that's exactly why we are in this time of uncertainty, the great uncertainty. We haven't had this kind of currency deflation in over 100 years. Since what, 29 was the last time we had this kind of currency deflation? We've seen a lot of charts describing that phenomena. Hope that helps. Um, the biggest thing the youth have on their side is time. The hardest thing they have on their side is lack of money. But and also uncertainty. I have no idea what the world's going to look like in 20 years. So if you're 20 years old, literally get to my age, it's 20 years. And I have zero idea what the world's going to look like. I have a vague glimpse of the world in about 5 years, and 10 years is pushing it. So in 20 years, yeah, you have absolutely no idea. It's going to be crazy. Very interesting. I mean, 20 years, it's all going to be AR, VR everywhere. Nothing like we had it to have it today. So probably the best sentiment, like I tell my cousins, acquire assets, like uh, buy things, but which is hard to process. Buy what? You have to start accumulating things. Okay, but maybe it's gold coins. You get gram coins, gold gram coins, but that's clearly not going to necessarily, it's not going to outperform tech and crypto. That's literally the narrative right now. The big macroeconomists and obviously us as well talk about like tech and crypto and what outperforms. So, all right, so accumulate Bitcoin, accumulate Ethereum, accumulate Solana, accumulate AVAX, accumulate FTM, accumulate stuff on Cosmos hubs, Atom, Osmo. Dot could be big in 10 years. It's not going anywhere. The chart looks great. Accumulate. But that also means it's a purchase, especially when you're at that age. Check back in 10 years. You don't have that money. You could check in at the portfolio value, but you have to disassociate yourself with that capital. It's no longer available. And that's what I do with my portfolio. It's just an illiquid portfolio. The fair market value is zero because these ownership of these assets they cannot be sold. So there is no money there. So that's the hardest thing to teach someone at a young age because they literally just work 2 weeks for like $400 and they're like, I'm going to spend $400 and it's going to be gone. And what do I have? I have a number on a screen. So it's very hard to teach. And this is literally why the entire population owns nothing because it's an entire mindset to own things. And literally everyone rents things. If you have a mortgage, you're renting your house. You're building equity to a degree, and that's very questionable in this day and age. If you're leasing a car, you're certainly renting a car. If you're financing a car, you're renting your car because you're not building shit equity. The cars are evaporating into nothingness. The depreciation on cars is crazy right about now. So deprogram at 20 years old, deprogram yourself from all the shit that everyone talks about. Go on Real Vision, and you got to find some folks like that have my kind of conversation, and they're out there. Hope that helps. Dan, how long are the conic locks? I think 8 months. Let's take a look. Have it over here. 8 months. 8 months. Food for thought. You know my sentiment. I'm my aura comes unlocked really soon, but the price point is absolutely abysmal. So what's the point in selling it? So I will probably just relock, and it is what it is. Check back in 12, 24 months. I'm not going to sell it at 67 cents. What kind of psychopath would sell their aura position at 67 cents when they bought it at like a buck 70? So I'll check back in 12, 24 months. That's probably the biggest thing for the youth to digest. Check back in a year. Check back in 5 years. Like 20 years old, what's your 5 year plan? I feel like asking that to my kids, and my kids are 10 and under. What do you see in 5 years? You got to train the kids to start to have a forward-looking vision of where you are right now, where you're heading, and where you want to head. And that's kind of like the concept of manifestation. Because if you believe you're heading in a particular direction, you start to do things that actually lead you in that particular direction. Yam Levy, good morning, Cap. Will cow protocol and cow design in general eat AMM market share? Multi-dimensional P2P cow design seems superior to the traditional AMM one. If so, how are you planning to play it? I love cow swap. Cow is downright fascinating. It's pretty much the only thing I use. Uh, Mill and liquidity, let's take a look. There is absolutely zero chance that I would buy it. Nobody is going to sell me OTC. I would never ever ever buy this chart. Maybe years ago I would, because oh cow, it's my favorite protocol. It's literally the only exchange I use. Go figure. But I would not buy this. Um, if someone wants to sell it to me at 8 cents, OTC, they got to get out of their position. They're in a tough situation. They need the liquidity to pay off debt. Great. I'll buy it. I'll buy it at 8 cents. I'll buy it at 35, 36 cents. It's not happening, no matter how much I like it. So digest that. How I'm capable of dealing with that emotion. Love this protocol. I use it all the time. And I am not going to buy cow. No way in hell am I paying 36 cents. I don't give a shit if it goes to $3. I am not buying it. Simple as that. Only acquire things if you could acquire them at a discount. It's kind of like a respect the portfolio, correct position size. You need, if I can't acquire the correct position size, I'm not going to acquire it. And at this price point, it's not happening. So it's okay. A bunch of questions today. Finally managed to get on a live stream. Can you break down Connick's value prop? What would someone want to balance liquidity over several pools? Well, it's the nature of seamless cross chain and what the space needs, that what this emerging market needs to mature. It needs the smoothing of liquidity across all the sources of liquidity. And that's a big thing. That's the value prop. That a person would want a single-sided deposit and smart contracts automatically distribute the liquidity and manage it in an optimal fashion without a human, no human. So that's a big deal, and that's literally the One Ring. And folks in here remember that name, and that didn't pan out as expected from an investment. So that's a great example. Great tech, where it's like, oh, this tech is interesting. But great tech doesn't necessarily equate at all to a great investment. So that's a very interesting thing to always remember. So Konica is very interesting, enough so for me to acquire the position I got because I was able to acquire the desired position size. Don't just buy things to add them to the portfolio. Maybe if you're 20 years old, yeah, you could DCA stuff. That's cool. But when you have capital and you have cash flow, you want to think in a more constructive fashion, in a more architectural fashion, more planned out fashion. And you really need to start thinking in terms of effective position sizes. Because if you cannot acquire an effective position size, all you're doing is excess diversification. And that will hurt a portfolio more than the addition of this small new position to the portfolio. Hope that helps. No horns, no tail. I'm confused. Also late to the stream, so don't worry about it. I'm confused too. Don't worry about it. Look at this chart. It's a lovely chart. I mean, it's nice for folks that own it at 5, 6 cents. That's cool. When you're at 5, 6 cents, all right, it drops to 20 cents. Who cares? Then you get to relax. I would never buy it at this price point, considering the crazy volatility that could come. Absolutely not. Absolutely not. That's a hell of a chart. This chart is absolutely wild to see, especially with what's literally this. Look at the directionality. It screams break to the upside with the launch of an entire new optimistic roll-up with data availability and all the currency producing capacity of the protocol. This is the crazy chart. Um, what I miss? What I miss? Would you say your solidly play is on solidly or better than other forks, a play that represents all solidly forks? Half the reason, or maybe in good part, the reason it's a solidly play is because someone sold it to me at a 90% discount. So, and that clearly creates a little bit of bias. I also have a little bit, I have opinion of the other V33 forks, and they were very opportunistic. Which is not necessarily a bad thing, but it is something. And they haven't gone as far as what Solidly has done, which is interesting. And I know I know some of those personalities. I've talked with them. And I think they would be a little critical of me saying the things I say. But like for instance, I'm not hot on optimism at all. There's barely any liquidity over there. I'm just not interested in it. I know Base is using optimism, so there's potential there. It's not exciting. So I'm much more interested in the concept of cross-chain, seamless cross-chain, and literally solidly has CCIP integrated and layer zero integrated. So that's fascinating. So Sarah did a lot of dev work, and I myself thinking from a dev perspective is, oh shit, that takes a lot. So that's interesting. Um, so that's my general sentiment. I would not have taken a position at market price. Period. So please keep that in mind. I would never, ever, ever have bought my position at this price. So what does that mean? It means the same thing I just said about cow swap. Done. Next protocol. If I cannot acquire what I want at the most favorable price to achieve the desired position size, I will not get it. So sometimes a portfolio really needs to be a manifestation of opportunity. Never forget that. That is probably one of the most important things I've ever said. Your portfolio may need to be an organic manifestation of shit that you could get at a good price, at a discount. And that's something I've talked about for a long time. If you can't get a discount, it's not necessarily a good thing to take a position. Um, I thought a concept I've started to learn programming, beginning either Python. Any suggestions? What languages to learn? Want to eventually build a D app. Python. Python might be the go-to. Viper. Python is a good language. Viper. Dart might might be the future. I don't know. You still have to speculate on where the hell all this shit's heading over the next 5, 10 years. I think there's a lot of vested interest in Kotlin and Swift. I think these big corporations are going to have these applications on the books for a decade more. I mean, you can't see past the decade. It's like the event horizon. But I see my career lasting another 5, 10 years. So Kotlin, Swift, you're good to go. Dart, which is Flutter, which is seamless cross-chain programming. So that's a big deal. I'm not a fan of React Native at all, um, but certainly Viper and Python, because Python's literally a great go-to for server-side engineering. So those are some good recommendations. Um, have you read the book The Sovereign Individual? Highly recommend it. If not, have you also any book recommendations? Not really. Real Vision. I'm much more of a visual learner. Um, and that's kind of the content I like to consume. I like financial articles, financial commentary. I like to read charts. So that's how I consume my information. I don't have any book recommendations, a traditional book, and I've heard of The Sovereign Individual many a times. George, thanks, Cap. Always a pleasure. Hertz, Noah, look at the link chart. Link looks great. Link looks great. It's got great liquidity. Oof. Got to zoom out. Got to zoom out. Go to the monthly. So Link looks great. Now, my sentiment is I don't need exposure to it. Um, I would have, if someone wants to sell me some Link at $9, $10, I'll take it. I'm not buying it at $19. I don't want to buy a breakout to 35. I'm not doing that shit. I spend my time with my family and my kids, and I got work to do. So I don't need breakouts. Um, if you want to buy a breakout, here's your breakout to look for: Ethereum, Bitcoin. But zoom TF out, and there's your upper channel. And that's the breakout. But that's also long term, so it breaks out great. You're not selling the. It's a whole other story. So trend line. You buy that breakout. So I'm not too interested in buying Link. It's going to do well. It's a big protocol. It changes everything from RWAs and meat space. And CCIP may catch a bid. I think Layer Zero has more traction endogenously in crypto markets. Um, but they're competitors. This is big tech. Don't ever let anyone tell you you're missing out. My God, that's how you construct a shit portfolio that is not really an organic manifestation of shit that you bought at a discount. Buy Link now. You're buying it at a premium, the highest price it's been since May of 2022. Ain't no discount there. You know who was winning with Link? Folks that bought all throughout the entire last 2 years at $5, $4. Those are the folks that are winning. And that's cool. Good for them. Because they had a vision and they had conviction and they bought at a discount. And frankly, everything's going to go multiples in this market. Everything. But I continue to say, there's not much at a discount right about now. Oh, 1 second. 1 second. Okay, I'm back. Link chart, hope that helps. Yeah, so CRV rates are making it hard on supply to increase. That's not a design problem. It's all about monetary policy. Rates go up, that encourages uh, returning your CRV or topping up collateral, and rates come down, encourage currency expansion. It's literally, it might be the best implementation of stablecoin monetary policy that I could think of. It's the pinnacle of how you manage an economy. It's real-time dynamic interest rates to either encourage expansion or encourage contraction, encourage inflation or encourage deflation. Go figure. So it's flawless, in my opinion. Will Curve be able to make money from its swap biz? I'm very, very excited for Llama Land. I think it's going to be very, very popular. Uh, the, the Llama code to manage these debt positions via CRV or Llama Land uh, is the pinnacle of managing interest rate policy dynamically. It's literally what I talked about earlier in the stream, where I see the solution to economics as a dynamic monetary policy, yet immutable at the same time, where you have a rules-based order that will be predictable and deterministic, yet it's dynamic and it bobs and weaves and it's elegant. Oh my goodness. So go figure. And great. Just so happens that's part of the curve protocol, which is something that I have one of the highest opinions of. How are you thinking about Curve high inflation? It's not high inflation. In fact, Curve is less inflationary than Bitcoin. Seems that revenue growth must be at least higher than inflation. Yeah, revenue certainly, and right now the inflation rate's less than Bitcoin. So it's what we need is exogenous capital inflows in the crypto markets, and that will lead to endogenous expansion of the currency supply. So we are currently at a marginally positive sum environment overall. And this is the uncertainty. When you see a little bit negative sum, it's just everything just churning. It's churning. Let's look at Arbitrum. 213, positive sum environment. I have a high opinion of what's playing out on Arbitrum. I think it has shown much greater strength than optimism from an Ethereum L2 narrative. It's a big deal. Solana's still too. Holy crap. What the fuck? So Solana's a big deal. Solana's a big deal. So my two L2s that I think will show the most strength, Solana's not an L2, but these two networks that I think will show the greatest strength, Solana and Arbitrum. I have a high opinion of the Cosmos Hub ecosystem, high opinion of what's probably brewing on Polkadot and Parachains, high opinion of obviously Bitcoin L2s as well. So take all those statements for what it's worth. Hey, Noah, can you look at Ethereum and Bitcoin chart thinking of FXing from fiat to mid-curve crypto? Well, this shit's at a premium. It's literally, it is what it is. Like, look, Bitcoin goes to 250,000 and then it crashes to 60,000. Okay, that chart looks great. It literally looks like everything it's always done. So take that for what it's worth. It's at a premium. It was a discount at 16,000. Zoom out to the 6 month. There's your discounts. 16,000. You want a little bit of more volatility, you go to the 3 month, and discount is 30,000. That's not a discount, it's fair market value. Discount 26, discount 16. So there's a little bit more granularity. Certainly at a premium. Bitcoin could go to 35, 34,000 on the 3 month chart, and this thing looks great. Don't be surprised if you get a crash to 33, 32. Don't be surprised if you get a crash to 31.5. This chart looks great. Process that. Danny, what do you think of IPOR? IPOR is a big deal. Interest rate swaps. That's big economics. I think it's a little bit early for that concept. I think it's mega right curve. I think right curve folks are going to take advantage of it. Um, take that for what it's worth. I don't think it'll be mainstream. But derivatives are the biggest market on the planet, 600 plus $1 trillion. And that's literally just, BIS statistics. Then you got the shit on the books of the banks, which is probably a quadrillion plus. I don't know, whatever the hell they're doing. So it's opaque market. No one really knows, but it's definitely hundreds of trillions, if not over a quadrillion. Um, Buddy, hey Cap, I think Kava is almost at its all-time low. Are these the type of assets you'd be looking now in the market? Do you think it's price, so to speak, even if it hasn't moved much? Kava's interesting. Noble's interesting because it has dollar good the majority of dollar stable coins for the Cosmos ecosystem, which ends up finding its way onto osmosis. Seamless cross chain makes it interesting, so I don't have any opinion of Kava nor Noble other than that's where the stablecoins come from. But that could be interesting from a Cosmos Hub perspective because anything that happens on one chain happens on all chains. Cosmos is this network of networks of seamless cross chain, which is quite fascinating and quite unique. I don't have much of exposure at all to Kava. My primary Cosmos exposure is Atom and Osmo. So I don't have too much of an opinion to help you out there. Bill, also, what are your thoughts on smaller portfolios investing, taking 20, 30K? How would you invest if you had a smaller portfolio like that? Would you still consider curve convex? So check this out. Obviously, I'm very careful with the thoughts that I express. The hardest thing about a smaller portfolio is expectations. Look, if you have 20 to 30K and your expectation is 40K, 50K in 2, 3, 4, 5, 6, 7, 8 years, then you don't have much of anything to do. Just follow the liquidity of you're expecting the Fed and the Treasury to be screwed at some point, and they need to expand the financial system and dilute the dollar to drop FX and take the pressure off foreign currencies. So then Ethereum and Bitcoin, and you're done. Like if you have a 5, 10 year time horizon, and you're not, and, and you just dollar cost average as well, um, and not necessarily deploy the entire thing. Maybe you need capital for something. Listen, in the end, these are just ideas that I express. So you have to make these choices on your own because the hardest thing about capital management is being comfortable with what you've constructed. You have to be able to sleep at night to allow time to do the work. If you're waking up at 12, 1, 2, 3 in the morning, checking your fucking portfolio, you've done something probably wrong and you're not comfortable. So that's the biggest thing for like a 20-year-old. Like DCA Bitcoin, and you're not checking. You're checking for fun, so you have to divorce yourself from that money. It's not there. You may want it, you don't need it. So you have to reprogram your brain. I think curve and convex for that size portfolio are questionable. I don't expect big multiples. I expect, listen, if curve is $1, $2 in 2 years, I'm cool with that. And then people are gonna say, "Oh, it underperformed. It's up 200, 300, 400% in 2 years. It's still below all-time high." Oh my God! And all those opinions will drive me nuts, and I'll laugh at them as we're up 400% at $2. So, I mean, what does that do? Is that your expect? If that's a liquid, it's complicated because if that's a liquid curve, then you're not getting any revenue whatsoever. I mean, you could do CVX CRV, but then you're susceptible to the liquidity at the time between CVX CRV and CRV, and it's complicated. I don't have easy answers. My choices that I make are a result of all of these experiences playing around with all these things. You have no idea what it's like to take those positions, so how are you going to be able to digest? Can you take those positions or should you take those positions? No one's going to be able to tell you these things. And if someone tells you these things and you make a choice based on what someone else says, how the hell are you going to be comfortable? The only reason like 401k managers and people that deposit the 401ks are comfortable is because they are completely oblivious to what the hell is going on. That's crazy. They made absolutely no investment choice whatsoever. So be the informed investor. I mean, literally, if you're 20 years old, all you need to do is accumulate Bitcoin and call it a day. And if you extend that on the risk curve, you go to Ethereum, and and now you're literally in an argument with yourself whether proof of work uh, uh, or proof of stake has a capacity to be as secure as proof of work, and what the globalist agenda is, and is Ethereum part of the globalist agenda? And that's the type of conversation. So keep it simple. You don't need to get as sophisticated as the market may think you need to be. I wish I could implant my brain into my children, and I'm never going to be able to do that. So thank you guys for listening to me because at least this allows me to tell these stories to get better over time at trying to explain this stuff to somebody. Kava fell victim to the multi-chain exploit. I don't know how much of a treasury they have to reestablish themselves. These are good points. So it's just off my radar in that regard. I inspected from a DeFi Llama and how many stablecoins are over there. Is Tesla at a discount under 180 today? I wouldn't buy Tesla, Microsoft, any of that shit because I don't trust the other people buying it. I don't trust people that buy stocks because it's literally what the general public does. I don't want those assets. I want assets that are bigger. And that's interesting. That's bigger scale and scope than Tesla. Yeah, money. I want to own businesses that are not available on the stock market. I want to own a bank. I want to own an FX exchange. I want to own a credit company, non-bank lending provider, so to speak. But I don't want to own one in the country. I want to own a non-bank lender that facilitates forex at a global level that's accessible to any country. That's just a bigger scale and scope of anything that's available in equity markets, period. It's the biggest business I could possibly think of. So I have zero interest whatsoever in Tesla stock. Every ERC20 was copied over to Pulse Chain, including NFTs. When it forked, I just converted mine into USDC and bridged it back to Ethereum chain. There's a free 1,200 bucks. Take your cash. Good stuff. Capitalize. That's clearly going nowhere. So that's nice that you were able to extract that kind of capital. In your opinion, why would one lock their Prisma rather than CVX Prisma? Wouldn't CVX Prisma be more productive? Unknown. Fortunately, 36% is something that's like, ah, there you go. So to me, that's a hell of a number. 36% is freaking crazy. You will never, ever, 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 ever get that in meat space. So when I see a number like that, it's a big deal. Um, food for thought. Crypto, can you bridge link? I believe so. Thoughts on Luna chart cap? Terra has most number of active devs on Cosmos, certainly. Yeah, no interest whatsoever. I just have no interest. I rarely take positions. Rarely. I'm certainly not going to acquire dust of something. So I need to have like, oh shit, that's something big. So I was obviously thinking about convergence lately, and I'm just like, no, I need the cash. I value the cash more. And when I say cash, it's literally Ethereum, Bitcoin, and stablecoins. I need the cash. I spent my available cash. So that's that. I just can't afford anything right now. Maybe the next couple months. Um, yeah, crypto consciousness, extract the capital if folks have it. That's always reasonable. George, are you concerned all about Roosh Solid Bag? Not anymore. So I thought about that a lot, and that's why I haven't had a position in years. So as long as it's VE, I'm not worried. And I'm further not worried because of how I took a position. I took a position at a 90% discount. So at current market price, sure, I'd be worried, and I would never buy it at current market price. Food for thought. So that is meaningful. But I'm sure he wants to see it succeed. Otherwise, he wouldn't have put in all the effort. He's literally always in Discord. I don't know. There's a couple of thoughts that come to mind and that many other people may have. And I just, getting a 90% discount sure as hell changes the equation with regard to risk considerations. That's really like, is the protocol going to be a success or a failure, independent of what anyone does with the price? Literally, 90% discount is 17 cents, all time low. Crypto, I know, but it's not pegged to one ERC. I don't understand, my friend. Are you planning to get more since you can get huge discounts? No, I don't think anyone's selling anymore. And it's not me getting a discount. It's in the channel. It's like, hey, does anyone have an NFT at 17 cents? I literally just asked. Uh, I it's not, anyone could go in there and ask. It's just their Discord. So I am not planning to do pretty much anything right about now other than eating some lunch, programming some stuff, getting on Slack to see what the hell my team's up to, and seeing my kids when they get home from school in a couple hours. So I thank you all for joining me on a Monday, February 5th at 12:55 p.m. Tell everybody to subscribe, and you know the deal. Link in the description for the most rational community in the entire crypto space. I will see you guys again later this week. Peace.